Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleague Nigel D'Souza. Nigel, hi. Friday, right? Thank God it's Friday.
Wow.
And let's hopefully end this on a high, a new high for the Nifty. Although it doesn't look like that this morning, but let's see, it's possible. The Sensex made a new high, so it's natural we wait for the Nifty to do the same.
Well, that's right, Prashant. Morning, and it's a great morning to wake up to, right? Because we're within kissing distance of those fresh all-time highs. So we've started that journey out there, and it's a Friday, so can't wait for the end of today. But it doesn't feel like, we are at all highs because a lot of those mid-cap stocks that have underperformed, a lot of the stocks have come off the peak as well. But tell us, how is trade set up?
I mean, just a quick thing. So U.S. markets, of course, were shut for holiday, and so there's no real cues from there. You've got US futures, which were higher, but they're flattish now. I mean, the gains have been given back. The Sensex hit a new high, and of course, I mean, the Nifty is just about 0.4% away from a new all-time high. So that's basically the setup. Let me just quickly tell you, how things are looking. And this is, I'm going to start with the Sensex, right? So the Sensex made a new high yesterday. All-time high, which is basically it's reclaimed the previous high, which was made in October of 2021. The graphics will come up on your screen, and I was looking at the global comparison. The only market which has done better than India year to date is the Brazilian market. The Brazilian market is is better, but it's 1/4 the size of the Indian market, right? So while we can say that there is perhaps this one market which has done better, but it doesn't count because the sheer size of the market is much smaller. Now to the kind of sobering statistics. And this is the point. Only 23 of the Nifty 50 stocks, even though the Nifty is at just 0.5% away from all-time highs, only 23 of the 50 Nifty stocks are above their October 2021 levels, right? And the same for the Sensex. Only 13 of the 30 Sensex stocks are above the October 2021 levels, which means about 60% of the Nifty and Sensex constituents, respectively, are below their levels where, I mean, the Nifty and the Sensex got to last year. So that is telling. And that is the reason why I guess one doesn't feel that enthusiasm, because although markets are at new highs, portfolios perhaps are still lagging. And you can do the same exercise for mid-caps, small caps, etc. And I think you'd reach the same kind of conclusion. Just a few names really out there which tell you the story. So, as I said, only 46% of stocks are above the October 21 levels, and these are the rank outperformers. You've Adani Enterprises, ITC, Mahindra, Eicher Motors, Coal India, State Bank of India, ICICI Bank, and a few others. But this is basically the list which is done the best compared to the last time the index was at these levels. And the laggards are, of course, technology names. Now, not all these stocks made their respective highs same time last year, but for the sake of consistency and comparison, we've taken the last time the index hit a high. Wipro, Divi's, Tech Mahindra, BPCL are some of the names which are big laggards. So, will it be a case where the index makes a high and then it kind of pulls the rest of the market up, the broader market, etc.? That's the ideal situation. So we'll see. For now, the SGX is indicating a slightly lower start by about 0.25% or so. Now, what are you watching?
Well, what a fantastic close we had to the November series, right? The bulls went home with all the gains. The call writers got stuck on the wrong side. And once we crossed that 18,430, that was the mark that we highlighted yesterday, that once that mark gets crossed out, well, we'll see a quick 50, 80-point rally. In fact, and that's precisely what's happened in the last 30 minutes or so. So the upward trend is your friend, and I think you'll have to stick to that for now. The broader market underperformance, though, that's a little bit worrying, or that's, giving you some bit of nervousness. Let's see whether or not that catches up. But for now, that's lagging. Yesterday, the good point also was, besides it being expiry and had a good close, you had the FI money that was back. They bought after closure on 4 sessions. And you look at both those two data points together. The FI is bought after staying out. The previous 4 sessions, they were net sellers to the tune of closure on 950 crores. So they turned around a little bit. Institutional flows, since we look at it together, they bought yesterday closure around 1,000 crores. The previous sessions, the DI and the FI number together, well, the institutions were actually net sellers. Now, if you're looking at a couple of other data points, well, take a look at the long exposure. At the start of the December series, well, it's a contrast to what we saw at the start of the October series. But you can't really derive anything in terms of a return because in October, they were net short. You had only 13% of the positions on the long side and you had a good series. In the November series, they were net long. And in fact, you still had a good series. And this time, they're overtly net long on the index. More than 75% of their positionings are on the long side. But the ones that are getting it right are the client side, right? And we've been tracking that for the last couple of series. So this time around, they're not that net long on the index. Previous two series at the start of it, they were around 60%, around 65% net long. Now they're only around 51% net long. So let's see, whether it's softer positioning getting into the holiday series. But for the time being, that's the data point we have. On the option side, 18,300, 18,000 put as well as 18,300 call. They have the highest open interest out there. But there's aggressive writing that we're seeing. 18,300 put, 18,400 put between them. Close to around 80 lakh shares have been added. So you're fine. Maybe you'll get a bit of a pullback, 18,250 to 18,300. That's the near-term support. And you need to stay long on this index, but you need to brace yourself for maybe a couple of 100 points pullback. And maybe the SGX will be suggesting some bit of a pullback. Let's see whether or not that happens. But the point that Prashant made as well, you'd like the mid-cap index to perform because in the month of November, no worries in terms of the large caps. The Nifty and the Nifty Bank are doing well, but the broader market performance is lagging yet again. So let's see whether or not it can catch up, Prashant.
Absolutely, and I think we need for that space to do better and for that to start to participate. You want a broader market rally, not a narrower one. Now, some calls which are coming through. This is Neelkant Mishra of Credit Suisse, who says that the recent bounce takes Nifty closer to its all-time high, but he finds that much of the performance over the last 12 months has been driven by an increase in 12-month forward earnings per share, offsetting the sharp decline in global P ratios. Therefore, he believes time correction is underway. India's P premium to the world and other emerging markets is already at an all-time high and is unlikely to expand from here. Financials and cement remain his preferred sectors.
Well, let's get you some money market views on the rupee. Bhaskar Panda of HDFC Bank says that the latest US Fed minutes indicate that the future rate hikes can come in smaller packets as inflation cools down. This has an impact on the US yields, which moved down and pulled the dollar index lower as well. Oil has also remained subdued. Given this sort of a backdrop, the USD INR may take heart and remain range-bound today with a little bit of rupee appreciation bias. According to him, the rupee will be in that range of around 81 rupees 55 paise to around 81 rupees 75 paise. A tight one there.
Well, on bonds, we've got Bhaskar Panda, who says that the Indian 10-year benchmark yield has cooled down due to global factors and is expected to remain range-bound. He expects the yield to trade in a range between 7.25 and 7.3%. All right, we have lots of stock-specific action to track today. We'll just get to all of that in just a bit in our special Top 10 segment. We're looking at names like Axis Bank, All Cargo Logistics, Punjab National Bank, ITDC, PB Fintech, and Adani Enterprises. That's on our radar on the back of positive news flow. Lupin is the only stock that is likely, in terms of news flow, which perhaps starts weaker. All right, we have our, and we'll get to all those stocks in a bit. Rajat Bhattacharya